know. Shawty got low, 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 low. Everybody. Apple bottom jeans, boots with the fur. Oh, the old club was looking at her. She hit the floor, next thing you know, shawty got low, 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 low. Everybody. Apple bottom jeans, boots with the fur. Oh, the old club was looking at her. She hit the floor, next thing you know, shawty got low, 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 low. Everybody. Apple bottom jeans.
Hello and welcome to the closing beat, everybody. Happy Wednesday already. Kind of a quick week, no? Quick week going by, and even more to come, actually. We've got inflation numbers to talk about here today. We got earnings coming up. All is good there. The last of the retail names reporting earnings, and of course, the bank's coming up next week. We are financial advisors here at Jazz Wealth. Hope you'll check us out at jazzwealth.com. And actually, we believe that we have 90% of our audio, video, computer issues, streaming issues solved for. And at the end, we'll show you what we did to make that happen. We'll see who can guess the parody. Have you ever seen that movie, Kevin? The movie that we modeled? Have you ever seen the movie for the model that we, for the video that's going to play at the end? You've seen it? Oh, we're learning that Kevin's a bit of a movie buff there. Some of you will not get it. You have to be of a certain age. But let's see who gets it. Let me know in the comments below. Let's talk about the markets here today. We got inflation. I was a 0.05% off, wasn't I? So headline inflation was only up 0.2%. So we talked about how if it was 0.3 or better, that it would be like 2.95%. Almost there. I'll bet you they actually revise it down when they do that later in the month. So inflation, or at least headline inflation right now, coming in at 3%. Okay, not bad. But remember, the Fed doesn't care. Headline inflation means nothing to them. They always talk about core inflation. Core inflation is at 4.8%. It's not bad. It's better than it was. Well, it's bad, but it was better than it was. And remember, they said that they project that it will end the year double what they're wanting. 2% core inflation is what they're shooting for. So they're on track. It's improving, right? We're getting a little bit better there. With that in mind, the S&P today was again higher. We now have a point here. So the blue line is the 50-day moving average. If I were to go through, Domino's Pizza we'll talk about, but that one obviously is doing better. If I were to go through stocks, you'd find that, or in the S&P, you'd find that 80% of them now, over 80% of them, are above the blue line, the 50-day moving average. There's Enphase, there's Invesco, there's Newmont, actually just today. You get what I'm saying, Eastman Chemical, so all above the 50-day. And so that's interesting because in the entire history of the stock market, only 7.4% of the time do we have 80% or greater stocks above the 50-day. You would think it would be more, right? I would have thought it would have been more. But no, it's 7.4% of the time. What this means is, well, is the performance better or worse? It sounds like it should be better, right? Well, when we get into that 80% range, where 80% of the stocks are above the 50-day, a lot of the juice is out of the market, right? So performance tends to suffer just a little bit. Over the next 1 month, the market tends to be positive, the S&P in this case, tends to be positive only 62% of the time. And when it is positive, you average a gain of 0.69% is the average gain there. If you want the best growth in a 1 month period, and we'll do something where we do the rest of them for you, but if you want the best growth over a 1 month period, then you actually want a time period where, let's go over here to the slides, see if I can find one for you. You want a time period where only 5% of stocks or less are above the 50-day. So for example, General Mills, if the majority of stocks were under the 50-day and only 5% were above, you'd have your best short-term growth possibilities. What does that mean? Well, first of all, it means the average gain going forward is 3.82%. So we prefer stocks to be what? Discounted, Right? The biggest gains come from the biggest discounts, and sometimes you have to ride through those discounts, but that's how that goes. If you want the highest odds of having just some kind of positive gain, like I just want the best chances, like what do I need to look for? When over 90% of stocks in the S&P are above the 50-day moving average, such as Kimco Realty here, you have a 74.4% chance of the next month being positive. So if you're only interested in the success, that's all I want. I just want to have a good feeling that we're going to have some kind of a gain. You would want to hope that this continues. And over 90% of those stocks go above the 50-day. You'd have the best odds of that happening. And if you want the, where were we just? Oh, General Mills. If you want not the best odds, but if you want the best possible return, you want to buy stocks when they're discounted. How many times have we done that? Like if you look through, like when the S&P has fallen so much, what are the forward returns there? They're always impressive because when stocks fall, people get excited and they want to buy there. So it's pretty cool. We're going to do something different here today. We're going to go on over to our new page that's back up and running. Excuse me. That shows the sectors and allows you to break down the sectors. If you want to join this, it's free for clients. If you're not a client, don't want to be a client, or can't, then you can join our research site if you'd like. It's on our jazzwealth.com/research. But we're going to look at the sector performance here today. As you can see off here to the left, almost all sectors were green. Let's just go sort by one day. So here's your best performing sectors: utilities, materials, and so on. Only two sectors that were lower were healthcare and industrials. If we look at REITs for just a second, here's a way to kind of zoom in on this. Over the last year, REITs have been trying to recover despite the higher interest rates and all that. Why are they recovering, right? I'll even zoom in a little bit. Why are they recovering there? Well, if we go over here and look to the left, what we're plotting is the stocks with the biggest, I'll do 6 months, the biggest 6 months returns relative to their contribution to the gains. In other words, the further to the right you go, the more say they have in the real estate sector, and the further up you go, the better the performance, right? And so a lot of these stocks are still down and recovering. More importantly, the stocks like American Tower, over here, Crown Castle, boy, this is kind of interesting, they're related. Prologis, they're still recovering. Well, what's interesting, if you can see it, if we sort by contribution here over the last 6 months, none of those names exist, right? Prologis is the first one down at the bottom here. So all the names that are doing well, look at the top, they have almost no say. They're contributing to the rally, of course, but they're not going to move the sector up all that high. We need these guys over here. A great example would actually be over in tech. So we'll do the same thing, and we'll look over in tech. Remember, we just talked about this the other day. The bigger the weight, the higher the return. That moves a sector higher. That's how you get this right here, when the big dogs in the sector do it. So what we do here is we just break it down for you to see, like, well, I'm interested in a different sector, like financials. I'm interested in financials, but I only want to play with the biggest stocks in the group. So if they go higher, the sector goes higher, I enjoy the gain, right? So in that case, you'd be looking at Berkshire Hathaway, JP Morgan, Visa, MasterCard. Over here, a couple of these names coming up for earnings next week, actually, and later this week. So those are helping lift the market. So what we wanted to do was we wanted to be able to share with you kind of what I did the other day, where we said, the stocks in the S&P that really move the market are Microsoft and Amazon and all that stuff. And so, okay, that's great. That's fine. We know that. But on a sector level, how can we go through and see what stocks actually move things forward? Not only that, how can we look at performance? So we could say over the last 1 month in communication services, the biggest name, this is an easy one, Meta, right? The biggest name is contributing the most to the gains. And if you don't want to look at the dots and the lines and all that stuff, you come down here and you say, well, over the last 1 month, who contributed the most to the gains? Meta. Something's going on over there. And if you just click it, you can actually see the chart there load up. There you go. It's obvious that it's participating. So it's a real visual way of kind of sorting through that. And I just wanted to share that with you, so something you can maybe get a step ahead and wonder, what's Dustin going to talk about today? How does he find this stuff? How does he stay up with all this? Well, that's one of the ways that we do it. The NASDAQ. Right? Obviously, this is going to have a great day, right? What we can do, let's do something a little ad lib here. I'm going to go back. I'm going to say we are up, let's see, we are up 7% in 30 days. Granted, slowed down a little bit, 7% in 30 days. Is that odd? I'm going to use the cues so you guys know how to play along too. Say greater than 7% in, oh no, we need to use a rolling search. So we're going to do it like this. Let's see if this is odd. Greater than 7% in 30 days, and just do 20 years. Let's see what happens here. So this is somewhat odd. What I'm going to do is go, so we can see the next day tends to be positive. That's fine. We want to look a little bit deeper than, we're not interested in one day. We're going to look and see over the next week, month, 3 months. You know how I do that sometimes with you guys? I say, well, this is what happens. Here's what we're doing. So let's take a look and see what we have when the NASDAQ gains more than 7% in 30 days. Apparently we have 2 spinners there, so you get extra bonus there. Here we go. Wow. Performance tends to be a little bit weak in the short term. Doesn't mean it's not higher. Just means it tends to be a little weak. We have an average gain over the next week of just 0.14, next month 0.6. Which what? We're already kind of seeing. We're seeing it right here. It's like it doesn't, we have a good day here and there, good bad day, whatever. But it just doesn't want to kind of get going because this is actually pretty odd. Over the long run, you can't go wrong. Momentum begets more momentum and all that. We're excited to see that. But now, over the next 6 months, 1 year, yeah, we can expect the NASDAQ momentum to continue. Historically, it does. Not without some volatility sometimes, but that's a side topic. Down here, we can see that our odds are greater too. In 6 months, when the NASDAQ is up 7% in 30 days, over the next 6 months, there's a let's call it 74% chance that it's going to be higher in the next 6 months. I like that. That's better than a coin flip. And over the next year, of course, the longer out you go, the more impressive longer-term returns get. So just really cool what you can do with that. So nonetheless, the NASDAQ feels a little pricey here. Feels a little bit odd, and it is a little bit odd that it does this so quick and so fast. 7% in 30 days is a little bit odd. We could tell that because the performance tends to just quiet a little bit. The odds of success are not so great. 59%, 60%. You know what I mean? Like, do I want to really go for it here? How about, well, if I know that in the next 6 months to a year, the odds are on my side, right? No guarantee. They're on my side, though. If I know that, well, couldn't I just say, like, cool, I'm interested in a pullback. It's already happening. Look, we already see that. People are interested in pullbacks. So is there a reason outside of a terrorist attack or something, black swan event type of thing? Is there a reason this would just collapse and fall apart? No, but it can certainly pull back. We can have 5% pullbacks, and that would be totally normal. And we now know, okay, in the short term, that would be totally expected. I get it. So we're putting the pieces together. And now when you put the pieces together, you can make the determination of, is this a good time to really go gung-ho, back the truck up and dump all the cash that I have in the market? Really? You know? And you're using stats to do that instead of just using emotion, because there's always people that like to use a little emotion. Let's move on. Bonds here at the end of the day, a little bit of a rally there. I'll take my comments back. Remember yesterday I said, oh, it's a little bit weak so far. This bounce is kind of weak. Well, no doubt the inflation numbers help you out today. The projected forward assumptions of what the Fed is going to do obviously help out. So we got a little bit of rally in bonds. That's good news. It's better news, right? Rates are still stupid high, but it's a little bit better news here in the short term for you. Also, oil continuing with its rally out of the bottom there. A lot of interest in that energy sector. At least in the short term here. So you could actually take a step further and try to look deeper into that. Is it everybody participating, right? Over the last 5 days or so, yeah, it's pretty much everybody. Everybody's participating. Returns over the last 5 days, there's only 3 names that are down in the last 5 days. Okay, so we're getting decent participation here. And when you go back and look at the price of oil, okay, we can attribute that to something. So we've got at least a little bit better of a look at how things are going. All right, let's look at Coty. So COTY, this is the company that makes all of the makeups. I don't know. A friend of mine says lotions and potions. They make all of that stuff there. Something about Kim Kardashian wants to buy back into a stake of one of her companies or something. I'm sorry, I don't follow Kim Kardashian, so I can't really, give you more than that, but that's what's going on over there. Domino's Pizza, we mentioned this here just a minute ago. They are, so this is interesting. They announced a deal with Uber Eats. So if you don't know, Domino's Pizza is the number one, by a mile, the number one deliverer of pizza. Meaning they got this thing down. Why would they partner with Uber Eats? And the CEO said, well, we're now to a point where the aggregators, he used that word, meaning Uber Eats and Postmates and all those companies, they have reached scale. So Domino's obviously has reached scale decades ago. And so they're like, now this is the next place for us to go and get growth. Well, the stock is up over 10% in one day. I'm just going to have a little fun here. Let's see how often. Is that odd? Greater than 10% in one day. Let's give it 20 years here. You can just pick whatever you want. I think that's odd. It's happened a whole 20 times in 20 years. Oh, okay, once a year. Maybe that's not that odd. Well, if you saw Domino's Pizza today and you said, that seems interesting, maybe I want to participate in that. I like this idea. Great, people buy pizza. If you did, this is not the most ideal time to participate. When Domino's Pizza has a 10% move in one day, and at one point it was even higher than that, we have less than a 50% chance of it being higher tomorrow. And you know that. I've explained these things before. 1 week, even worse chance. You have basically a loss on average there. Over the next month, it's a little sketchy. In the long run, yes. But again, what does that mean? It's the same as the NASDAQ, right? Put this all together. Okay, it means that I missed it. If you don't own it, I missed it. Great. Oh, good job, Domino's. Tell you what, take a break, catch up to a more reasonable price or consolidate for a while. Let me feel good about paying this new higher price, and then I'll come along and play. Now, you don't have to worry about it because, hey, long-term growth should be pretty good for them, especially if this deal works out and continues to do well. People buy pizza through Uber Eats but still go to the stores, and they have Domino's drones and flying cars and stuff deliver. Awesome. But do I want to participate now? Probably not. It's not in my favor to participate now. I maybe want to put it on a watch list. I want to see how this plays out. So again, emotion. Let's take that out of the game, man, because emotion will get the best of you. Were you emotional about the Chinese stocks? They were all higher. The premier, not the vice premier, the premier said they were going to start supporting more business, particular tech. Well, that helps out a lot of these companies. Pick your favorite Chinese stock. You're going to see that it was higher today. United Airlines. I should have got a picture of this. United Airlines has new first-class seats. Cody would know about that. Cody?
First-class seats?
Yeah, new first-class seats on United. Tell me, are they good?
They're great.
They're great. Okay. To me, they look horrible, but I don't often spend time in first class. I know you only fly first class, so thought I'd ask you about that.
Yeah, I'm a big first class.
Oh, yeah.
First class only.
Totally outed Cody there. But I'm just kidding. He's more of a skip lagger. Do you know what a skip lagger is?
No, I don't know what you're saying.
You won't admit to it. Because American Airlines is starting to crack down on this. Stock was down today. Of course, this is overbought as well. American Airlines says, if you're going to do the whole skip lagging thing, we're going to cancel your ticket. This is that, I think there's a website now, actually. It's probably a bot or something. They'll do it for you. But let's say you want to go to, where does American go to? Charlotte. You want to fly to Charlotte and you look up a ticket and it's $200. But if you're willing to go to New York, the ticket's only $170. So what you do is you book a ticket to New York with a stop in Charlotte and you just don't get on the next plane to go to New York. That is called skip lagging. And American Airlines almost daily now has found a way to get into the news where they say, we found a passenger that was doing that and we took them into a room. We questioned them like you're in trouble for bringing up drugs or something into the airport. So we questioned them, found out what they were doing, canceled their ticket, wouldn't even let them board, man. Holy cow. It's a great idea, though. I've seen it online where the kids do that, and they say, look, if you're going to Seattle, like, have a layover, or if you're going to Dallas, have a layover somewhere, and then just don't get on the plane. Never done that myself, but I don't fly much, I guess. But United Airlines, nice try. Delta still, to me, has the better first-class seats. Anyways, Jazz After Dark here tonight. We're going to talk about how to think of your finances like a balance sheet. instead of I have this debt, I have this income, and I can maybe go work somewhere and make more money. That's kind of basic, right? We're going to think a little bit deeper, try to get into that. And let's see if we can answer some questions. Otherwise, we'll show you how we handled our issues with streaming and the mic, everything like that. Pizza Hut's your favorite? So, full confession here. Back in the day when we would get pizza, Little Caesars, man. I would go with Little Caesars all day long. And I'll tell you what we did. You take Little Caesars, it doesn't need to be warm by the time you get home, but you put it in the oven under broil, give that a second, make those pepperonis nice and crunchy, then throw a little hot sauce on top, Crystal's hot sauce, of course. And, it's phenomenal. I haven't had that in forever. Like, I don't even know if I had pizza forever. I'm not sure. Yeah. Gold future's been cut off, the bottom ticker. Look at that, Cody. It's going by right now.
I did. I saw his thing.
You think you like the tools and shortcuts in old Schwab there? Yeah, I don't know if they get rid of that Thinkorswim, but I hope not. See. Giovanni bought Q's risky play, July 13th, 373 put. Well, you're an active little one, aren't you? You're an active little booger. 373 puts and, short term. There you go. 372. So you are really betting on a pullback here in the short term. Can't say I would have done the dates that you picked. I would have tried to get those dates in the week, which is not this week, not next week, but the week after, which won't be the 19th. That'll be too late for you. It will be. I would have picked that final week in July if you're going to do what you're doing there, because at least then you have the wild card of the big tech earning stocks if you're playing for that kind of volatility. Yeah. Reason for cybersecurity stocks down. I didn't catch it, but so I can't say, actually. Be honest with you there. General Mills, you like to pull back. There's Doc. He likes a good pullback. You don't want Dr. Horton the stock, though. There's no pullback there lately. Yeah. Grinding retires. Going with Bank of Nova Scotia. Wants it over $60. I do not think it goes over $60 by the end of the year, unless there's something I don't know about. But all news aside, why? Is there any? No, there's no shock or supposed shock in earnings. They haven't raised the bar too high. I'm going to go with no on that one, just off the top of what I can see here. Eloy says, I'm with some cash on the side, ideally add on to the S&P, keep waiting. So I prefer a discount. That's just me personally. So for me, I would say that's cool. You got the cash there, no stress, no worries about it. Give yourself a pullback, man. Mm-hmm. Kirk has lost all faith in me with the Little Caesars comment there. I didn't say it was like gourmet pizza. You know what I mean? I just said, hey, I had to doctor it up a little bit. By the time I did that, I thought it was pretty good. Used to be a really good local deep dish pizza place here. You do waffles and, talking my language. Talking my language there. Yeah, I hear what you're saying. Stop it. All right, let's see who gets this. We had issues streaming with audio, connections, all this stuff. You've seen what we've dealt with, and so far so good since coming back live here. Let me show you how we handled our problems here like grown adults, right? And just took care of business. Who can guess the parody?